Hey, good morning, everyone. This is Roberto Estevez, Stove Cold Forex, here on School for Technical Analysis, Google Hangout. Today, we're going to review the Australian dollar versus the Japanese yen on the 2-hour chart from this Tuesday, as well as the Euro Japanese yen 1 hour from yesterday. And go ahead and take a look at the pound dollar against the Australian dollar that was posted today. So let's go ahead and begin here with the Australian dollar versus the Japanese yen. We had this bullish butterfly that completed here. We had the target of 96, which you can see here. It came up short of the fib, but the high was 96. Well, let's put this on this, sorry. So we're getting out of that. 96,004. So it did hit our target one. So at the least, you should have taken 50% off the table in your position, if not all of it already. If you took 50% off the table, more than likely you should have made this a risk-free trade after it completed your target. So let's go ahead and delete this pattern here. These fibs no longer relevant. As we see here, it made a lower low. Remove these targets. We still have this extreme Fibonacci level here, which are going to be our major support levels, to see what levels are going to come based on the previous uptrend, what support levels we have for the downtrend. Okay, so after this high, we're going to go ahead and look for swing lows just to draw some support lines. We have it on bid, so that is correct. Add line, high, low. I just go swing low to swing low just to see how that goes. No pun intended. I'm trying to go Drake on you guys. All right, so that's the next swing low. Now really to here, where the more obvious point there, we had the breakout there. Could have gone short here. Either hedge your long if you're still in, or to take the short just because you're trading what you see based on price action there. From the low to the high of this trend here that we're seeing the breakout in. Nice round number, 9465. Hasn't really hit that yet. So if we got in at this break in 95.19, nice little 30 pip trade there, more or less, 40 pip. At 19, so yeah, that's actually 60 pips there, give or take, whatever you pay for the spread. And if you got in, right when that kind of closed below that, if you're waiting to retest, you never really got it. But that's pretty much close there where you just kind of get in. It's not like it broke all the way down here, and then you have that gap for your stop, the visual stop, if it came back into the trend. Not that close to your entry. All right, guys, that was a nice break of support there. Let's go ahead and put this on a 1 hour where you can probably see the trend a little bit better. Swing low, test. Shows how valid our support is. The confirmation is that price touched that level 3 times. Three times right here. Never broke it. Multiple times, 5 times basically. It never broken until here. So that was a nice entry there, showing the breakout. Swing high to swing high. As far as resistance, we got higher highs there. Maybe from a previous trend. So from here to here, we can already tell this slammed back inside that trend. So that failed. If they did break out here, we got that signal. So we're not going to use that. So from this low point, using these highs, Let's see if we find any resistance that's still valid. There's just part of the top-down analysis that we always try to do on a daily basis. Okay. So for swing high to swing high there, you can see they touched there, came back down. So this resistance here is still valid. Let's go ahead and take a quick look back up the daily. As you see, guys, here I have a possible D that I don't have drawn out yet, but I do have the fibs on it at the 707 level. We had a little bit more of a bullish move as far as more yen weakness across the board, not just the dollar strength that we saw, which is what I was speaking about yesterday, why this is not school for fundamental analysis. I just kind of throw my 2 cents in there because you got to be aware of what's going on with monetary policy. It just turned out it was just bullish dollar. Dollar beat everything, beat the pound, strong against the euro, strong against the Swiss, the CAD. Dollar was the biggest gainer last year. We didn't see the yen weakness across the board. So that's the sign there that perhaps Abenomics right now might be not the biggest mover, but definitely they still have the world's largest stimulus package right now. Okay, guys, let's go ahead and take a look at the euro yen from earlier. You can see here the 618 where we had the 1272 convergence with the 618 there. Candle closed above here. That was the signal that this pattern fails. Could continue to the next Fibonacci level, and it did. In the next 2 candles, completing a butterfly pattern, which is not shown here. What you do see is the 707 hit. This is why we always use round numbers. Give me a second, guys. right, everyone. This is Roberto Esteves back. Stone Cold Forex here on School for Technical Analysis. Google Hangout. Sorry for the wait there. It's a little complication there. All right, so we're going ahead and continue reviewing this Euro Yen 1 hour chart. Like I said, it closed above our decompletion from yesterday, above the 61.8 retracement. That was our signal here to get out. For everyone here out on the East Coast, that was at 5 a.m. once the 4 a.m. candle closed. And we can see in the next following hours, it went up to 707. You can see here marked in this lighter blue decompletion, which was also shown yesterday, possible decompletion 135.85. The reason this is a different blue than the blue that was here or the one above is because we're using a different XA. In this case, we're using the extreme X to find our ABCD convergences. Now we're going to go ahead and use our most recent XA swing, which will be from here, which I already have drawn there, the 1272. So I'm going to go ahead and delete that because I already have it drawn. And I'll just go ahead and draw the visual, which is the lines here. I'll change the colors after. And then, of course, not to confuse, I will go ahead and from the extreme X, add a little, I guess I hurried up here. So I'm going to move that to where it matches. Of course, because this XA, there's no convergences here, only the 88.6. That's one of the confusion there. Is continue to make the current pattern. Move these lines to light blue. Of course, we do this as a visual, so it's not just fibs on fibs. It's kind of like putting the points together. It's a little less confusing on what you're looking at. For those that are new to pattern trading, using different Fibonacci levels altogether, sometimes it could get confusing if you don't, label your XAs, draw the lines there connecting the A, B, C, D with the X, and it looks pretty too. It's not lying, guys. Come on, this looks good. Now I'll go ahead and take off the 618. We can see here this never hit the 1272. That's why we use round numbers. We round it off to a nice round number, just like we did with the Aussie Yen. Okay, let's go back to the Aussie Yen real quick, just to show an example. The 50% there was 96.123. You just made a round number, 96 flat. Hey, see, price isn't perfect. So knowing that price isn't perfect, the 1272 here is 135.948. Make it a round number, 10 pips below this, 135.85. The high there, 135.856. Round numbers work, guys. This could still very easily come back and test there, depending on how the day goes, but there's a reason why we make it a round number and not be so cheap and just wait until it actually hits the fib. This price is not perfect. Okay, so our targets here are 135.65, the 50% retracement from the AD swing. Our target 2 is 132.50, the 1272 retracement from the AD swing as well. A failure of this pattern will be a closed candle, not above this 707, but above our 1272, where we have the nice convergence. So anything above 135.948 would invalidate this pattern, guys. Continue to watch this throughout the day. We can actually add some, or we're on bid here, we can go ahead and draw swing low, nice and tight. Some support. Just by the eyeball test, this looks like it's going to come around our target 1. Watch for this, guys. Watch to see how if this hits our target 1 right around there, or if it hits our target 1, Might have a nice entry there to continue and then play to the fib extensions. Once again, if this breaks this trend line prior to, excuse me, I'm gonna say that again. If this breaks a support line here and it already broke through the 50, that could indicate that a sell here at the break of this support, which would then be resistance, your target could be this 1272, which is from the low to the high of the previous uptrend, because we're seeing a break in that uptrend showing the downtrend. Okay, let's go ahead and now review, take a quick look at the GBP AUD, the 2-hour chart. Very, very nice butterfly, very symmetrical. Definitely like the very short BC swing. That's not longer than an AB or a CD. We have a very nice long CD swing. Okay, so from the XA, this is at the 1618 with the 2618 ABCD extension. Banner completed 2.0035. Hanging around there, we are seeing quite exhaustion in here. It is consolidating. We could move this to a smaller time frame and go ahead and analyze this sideways movement there. We can go ahead and do it in a moment. Give me a second, guys. All right, guys, this is Roberto. I'm back. Typically, I don't take personal calls doing these hangouts. I apologize. As I was saying here, we have some consolidation here that we could go ahead and take a look at a smaller time frame. But I'll go ahead and save that for tomorrow's review. And just going to add a couple things here to this chart that I wanted to go over with you guys that I didn't add for the chart of the day. Going to go ahead and just analyze this uptrend. Swing low, swing low. Go ahead and add a support line here. Okay, green is always for support. Whenever you see a gold line from me, that means it's resistance. Okay, no, swing low, swing low. I don't like it too much. Reason B, we do have this high and that, so this already busted through the trend, so it's now within the same trend. Once again, I would not swing low here because this is a higher high, so it's not within the same trend. Okay, I had the trend up, downtrend, then continue in an uptrend. So what I will do is from this high to this swing high, go ahead and draw resistance there, see if that's still relevant. If not, it's gonna pretty much it's gonna call it a day there. Go for resistance. Okay. Had a breakout there. Came back inside the trend. I gave you the sign there that could go lower. It did, but eventually went higher. So hey, you can't win them all, guys. So same thing, guys. Like I said, you can't win them all. We have a closed candle on the 2-hour chart. Make sure you have it on bid. We have a closed candle above 2.00618. It would invalidate the pattern, and that will be your signal to close. In the example that we have for the Aussie yen, you can take 50% of your position at the completion of target 1, as well as just a precaution in case it doesn't get to target 1. When it gets around the 38.2, you guys can make a risk-free stop at 0, moving stop, whatever works best for your risk tolerance. We do have the target 2 on 1.911. Let's go ahead and see how this moves throughout the rest of the London close, New York, and the opening of Asia. Being that this is a 2-hour chart, this could be a pattern that will get to our target probably maybe in a week or sooner. So definitely, if you are a day trader, you get in and out every day, don't leave positions overnight, this may not be the trade for you. Forex chart of the day, we implement the same things that we do on Forex top-down analysis. So we analyze various price periods. So hopefully we find opportunities that suit everyone. Sometimes they're going to be in the largest time frame, sometimes they're going to be in the smaller. So I suggest if you're watching this on YouTube, instead of being here in the Hangout, go ahead and hit us up on Instagram, Twitter. And if you want us to take a look at any chart, let us know. We'll go ahead and look at it together. We'll set up a Hangout. Thank you everyone for joining us here on School for Technical Analysis. Sorry for the disruptions here today. The money keep calling. Everyone keep your pen strong. Thank you.